The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 3rd, wonderful Wednesday edition of Hour 2 of The Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have a wonderful Wednesday. And let's always remember, what's talked about is a dream, what's envisioned is exciting, what's planned becomes possible, and what is scheduled becomes real. And I want to thank you for scheduling your time with me here this morning. I'm grateful for your presence. I am here to serve you. You can give me a call at 877-927-6648. Internationally, that number is 727-445-1044. Remember, if you've got a question, somebody else has that exact same question. So don't call in for me. Don't call in for yourself. Instead, a random act of kindness. That, folks, that is the way to live. This is Wonderful Wednesday. Of course, this is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading off about 6 points, so we got a flat market out here. She's trading 17,873. The S&P up 2, trading at 2,068. The composite here is struggling, down 9 points, trading out at 47.46. Russell up 2 points at 11.70. DAX up 45. FTSE off 8 points out here. Gold's up 5, or about $6 really, 12.05 with what it's trading at. Silver up 3 pennies. So a flat market out there. Platinum's up $5. You got high-grade copper down 2 pennies. Light sweet crude is up 80 cents. Lead the charge, the upside, GIII Apparel Group up 9, almost 10% here this morning, up $8 and change. Pioneer Natural Resources up about $6, up about 4%. Cimarex Energy up $4, up 4%. Diamondback Energy up $6. Humana up $4, up 2.5%. You've got to the downside, Puma Biotech just being taken to the woodshed out here off $32. That's down 14.5% inside that equity. Priceline off $11. Amazon down 9 right now. Intercept Pharmaceuticals off 7. Netflix off $6. Tesla down 5. Alexion Pharmaceuticals off 4. Bob Evans Farms, they're down 4 points. Wynn Resorts off 4. So a lot of the 4s out here. Okay, so let's go see what has the market done so far. And if you caught us in the first hour, this is a little bit of a carryover from that. Really, take a look at the ES Mini. I think that's really one of our great gauges to be paying attention to. Now, we look at the 30-minute chart out here, so going down to an intraday time period. The blue horizontal line going across my screen, key level. I cannot understate just how key 2070.75 is in the ES Mini. I don't know how it works. I just know that it works, and it's a beautiful thing out here. Now, and the 30-minute chart here, as price was hitting that level, what it was doing, a couple of different things. One, it ran into that area and it became resistance so far. No reversal signal yet. We're at 10:09. We'll come back and we'll certainly take a look at this at 10:31 to see if there's been a reversal candle. Why would that be important? Well, you know, one of my favorite patterns, the pattern that I teach, I immerse people in the workshops that I do out here. I did a workshop. It's a 7-week trading course, actually. It's a trading course. It's a mentorship. It's I'm there for you to be able so that you can master these different patterns out here. So it wasn't just a one and done. I've got a half the workshop that we did on November 22nd. That's archived on your members page through February. We've got the second one. That's going to be January 9th. And in between this, weekly updates with regard to patterns, specific patterns that we're looking at. They could be tradable if you wanted to utilize the system out here, buying and selling the D point. And this other tool and this other system where price moves higher, does it with less relative strength out here. That's the pattern that's in play as price hit that level. Now, at this stage here, it's only a potential pattern. There's a difference between potential and something that has been confirmed out there, and that's the beauty of being able to also utilize Japanese candlesticks. You see, Japanese candlesticks are absolutely the way that the market's going to communicate to you. You know, we take a look at charts. We take a look at the, in fact, it was in the composite, I think, the very first bearish reversal candle took place on Monday. I think it was Monday when it had a bear sash candle out there. Their markets are going to go up until the earliest that it can go down is when the actual sign painters of the bears actually show up? Well, we don't have that here right yet. We've also got a fifth wave up in a Chapman wave count out here. So we've got that going for us. You can sixth wave, I should say, because we're at F out here. You've got a G that could form a little bit higher push and still this pattern. So, just simply at this stage here, what's going on inside the markets is the ES mini is up against a very significant level of resistance. You break above resistance, old resistance should become new support out there, and that's what we want to go ahead and keep our eyes on. So we'll look back at this here in about 20 minutes to see how this actually plays out, and then we'll try to do it one more time at least before 11 a.m. so we can see if there's been any kind of signals out there. That's what's going on inside of the ES mini. If we take a look at the euro out here, the euro trading off at about 1.231. This thing is breaking through swing points. Let's come back here. Where's this? The 1 to 1.8. I'm going to come back and take a look at it here. We're just looking at the actual cross rate currency pair out here. And there's the A to B equals CD. So at this stage here, you're trading just slightly below the 1 to 1.618. No reason to believe at this stage, and actually it would be better for the euro to move down into about the 1.2225 range out there, the 1 to 2 A to B equals CD. Oftentimes, if you got the art of timing the trade out there, you know that oftentimes when you do a 1 to 2 A to B equals CD pattern, you see a change in the trend. In this case here, the euro US dollar could get down there with less relative weakness. Then you see a bullish reversal. You got a couple of patterns that you would be able to put together. But we do not have that pattern as we speak right now. Whether it's a daily chart, even if we go switch over to an intraday chart out here, a 30-minute chart, are we going to see anything here that gives us any sign of bulls? And the answer is absolutely, positively not. Not a bullish candle really in sight. You had a little piercing candle right here, no follow-through. Right here being about 5 a.m., between 5 and 5:30 this morning, but no follow-through during that next half-hour session out here. Just no follow-through at this moment inside of the euro-US dollar currency pair. All right, let's go back and take a look at some of these. Let's go take a look at the ETF structures out here. So let's look at the Qs. Right now, the Qs are off 26 cents. Composites off 3 points. If we take a look at what did the Qs here do yesterday, the Qs had an inside day. An inside day just simply means that it traded with inside the prior day's candle session. Is that important? It is important. It's not a Japanese candlestick. It's a candlestick, though, that does reveal information to us. We had the Qs move down on Monday, December 1st, with 35 million shares. That 35 million shares was, in essence, made a high on Friday with 17. If we multiply times 2, kind of similar volume. Wasn't exactly like spectacular volume off the highs or anything along those lines. And if we take a look at that inside day, the message of the inside day is that price should continue in the trend that it just came from. In this case here, I have to say that this is a reversal candle configuration out here between November 26th, the 28th, and the December 1st out here. That says you've got resistance, a natural resistance at 106.25. You had an inside day yesterday. It shouldn't surprise us if the Qs, in fact, trade lower. Where are they going to trade down to if they trade lower? I have to say 101.07 becomes the mark that we take a look at. Why? Because we had that accelerated volume day in the markets on October 31st. The low of that trading session is 101.07. It becomes really back to the breakout area. That means we'll be coming back to the October 30th range. October 30th, anywhere between the low of 99.14 and 100.26. So if, in fact, the Qs trade lower, that becomes your price point. If the Qs decide to take out resistance, where will they head to? Well, then we can come back and take a look at the A to B equals CD pattern out here. Inside of the Qs, we'd come back to the low here from April 15th as our A point. Our B point is out here on the trading session of September 19th, and your C point down here on October 15th. 1-to-1 would take you to 107.52. So you break above the level of last week on the 28th, 106.25. You should expect 107.52 to become your target. That is what's going on inside of the Q. If we go take a look at the Dow Diamonds, up 20 cents today, trading out at 178.76. The Dow Diamonds have already formed that they're already completed that 1-to-1 A to B equals CD. Now, what was interesting here about the Dow Diamonds yesterday was that it made a new high. That high, by the way, was 178.77. That was the high. Volume yesterday, 3.9 million shares. Now, that alone is just simply spectacular and amazing. Why is it spectacular and amazing? Because on our holiday lightened trading session, short hours, we did 4 million shares on November 28th. Now, that high out there was 178.69. Yesterday's close was 178.56. Inside the Dow Diamonds, you had a failure at a swing point with lighter volume. You need to see follow through today. That level is being tested, looks like as we speak, 178.69. You're at 178.74. Now, if the Dow Diamonds continue to motor on up, the next level for the Dow Diamonds to head to would be 183.96. That would become your 1 to 1.272 A to B equals CD to the upside. No reason to think that it won't do that. Of course, the only reason actually to think that it wouldn't do that is because of what is going on inside of the Dow with regard to the general out here. If we take a look at the Dow, if we take a look at the general, we take a look at divergent patterns. We pop this up on the screen here. What we see is Dow, the General Electric out here, has not confirmed the move that we have seen higher here, even the gradual move that we've seen higher inside of the Dow. Typically, this pattern, when things diverge, for whatever reason, the General Electric, I should say, is one that provides us with the information as where the market direction will go. And at this stage here, you've seen General Electric actually making lower lows. That is not the case inside of the Dow. Now, can this be used as a timing tool? Absolutely, positively not. It is a divergence tool. You become aware of divergences that are out there, just like you would pay attention to divergences inside of the equal-weighted ETF for the S&P 500 versus the actual SPY. In this case right here, we're pretty close to a diverging pattern out here. This is how important it is to pay attention to these things. Now, they can resolve themselves, right? They can't be used as a timing tool. You go look at other tools for that. Now, if we take a look at the equal-weighted ETF, and I was going to try to do that. Let me grab that arrow again. It's ever so slight right now, so this could easily resolve itself. This has not yet taken out its highs, not made a higher high, whereas inside of the S&P, that is, let me see, yeah, it has taken out the high back here. I'm using, it looks like around November 24th as well as the 26th out here. So we want to pay attention. There's a potential diverging pattern that is showing up inside of the equal weight versus the actual S&P. Maybe really, right now it's on the cusp. But these patterns here in the past, they have reared their head. They have shown, and they have shown they've been a leading indicator of what is to come. Now, it doesn't give you any kind of price damage out there. But again, if inside this we were to, so that's what's going on inside of the equal weight. We don't need to really look at the equal weight structure inside of the Qs because we know that they're not making higher highs. We just took a look at that, so no divergence in patterns there. If we go back and take a look at, let's look at the VIX index, see what it's doing, 1260, so no big deal there. The number there to be watching today, 1442. Don't know that we'll get there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You got the Dow's up 10, S&P's up 4. King is on the move out here, up 300 ticks right now, trading out at 89.01. Of course, I've got about a 10-minute delay on that, so it actually could be a bit off. But you've got gold up by $7 out here. So gold saying, hey, I don't care if this U.S. dollar index is moving higher. I'm moving higher as well. Be interesting to see where gold actually closes out the session out here. If we go take a look at some of the larger cap stocks out here, let's look at Apple, ExxonMobil, see what they're doing. Apple right now trading out at 115.66. That is up $1 out here. Now, in the case of Apple, we know we had that big sell that took place in a 1-minute chart back here on December the 1st out here. That's got this, there was some pretty decent volume, and you can't say that it was pushing highs necessarily, so it was really pushing lows, that volume out there from December the 1st, 83 million shares to the downside. Has not really done much sense. Let's put this on a intraday type chart out here. Let's put this on the 30-minute chart, see if we've got any kind of Gartley pattern or anything that shows up. So here's that big, now this is on a 30-minute chart, but it all occurred, one huge block. So you had a big buyer and a big seller out there. But otherwise, really just kind of trading flattish out here, not providing me with a whole lot of information here on a 30-minute chart as to what it wants to do. So just kind of being held in check out there. Let's go take a look and see what ExxonMobil is doing out here. What we know about Apple is it was pushing lows with volume. In the case of ExxonMobil, she's up 67 cents, trading out at 94.86 right now. ExxonMobil getting back into a gap out here. We'll see if it can repair this window, that window that was established right here on the trading session of November 26 out at 94.36. You're up above that area. That is bullish. If it gets rejected as it did yesterday, then that says that becomes a very significant area of resistance. Once you break through those levels, that resistance should become support out here. But what it really says is, okay, how is ExxonMobil dealing with the November 21st high? That's its most recent swing point. That has 12 million shares. Only been trading for an hour, and you've got 3.3 million shares. So in the case of ExxonMobil, it's moving higher with volume. Now, ExxonMobil, Schlumberger, Chevron, those three make up a significant portion of the XLE. So if we go take a look at the XLE, that's up $1.51. That is probably the leader in the clubhouse here today. Let me take a look at, I think I might have it over here, percentage-wise. No, probably right here. So percentage-wise, it is it's the material sector. How about, no, it's the energy sector, up 1.8%. And then behind that is the material sector, the XLB. That's up 1.4% inside of the S&P 500, inside of the SPYs. But let's go back and take a look at the XLE. I can do it right from here. Let's take a look at the XLE and go see what this is. Well, we identified what ExxonMobil is doing. In the case of the XLE, it's still inside this gap down here. So it is above the gap down, which is really the trading session from November 28th. That high is $82. Even Steven, you close above that. Really, what you do is you'd be paying attention to what's going on inside of ExxonMobil, Chevron, and Schlumberger as an example. So let's go take a look at Chevron. CVX is the ticker symbol, just to get a better idea for what it is doing. So here you've got that same, just like we took a look at with ExxonMobil. Chevron is not as strong thus far, meaning it has not even gotten to the resistance level of the bottom of that gap, which would be the November 26th low, 115.02. Now, the volume on that gap down was 11.9 million shares. Today, you've done 1.6 million. So Chevron does not have the same oomph that ExxonMobil does. If we take a look at a trend line out here inside of Chevron, you can see this is a trend line that in essence has been in play all the way back from July 24th, 2014. Didn't mean to add that line out there. In the case of Chevron, in order for this to truly get into a bullish formation, not only does it have the resistance of this gap down, that blue horizontal line at the 115 area, it's also got resistance of this red diagonal line out here. If you break above that, that would bode well for the for Chevron as well as the energy sector, assuming that ExxonMobil continues to move higher. Schlumberger, let's go take a look at it, see what it is doing. SLB is the ticker symbol. Again, these may not be the top three, but they're pretty darn close. Inside Schlumberger, it's struggling. Schlumberger has not been able to, right now today, trying to trade above the November 28th downdraft, which had 18 million shares. Not too bad today, 3 million shares. So it's got similar type volume, and if it can close inside the gap out there, that would be that would say, okay, maybe price tries to run all the way up to that resistance level, and that would be the November 26th low, $92.30. Right now, we've got the Dow. She's up 14, S&P up 4. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 13, S&P is up 5. Hitting the wire here right now. It says crude inventories fall by 3.7 million barrels. I don't know if 3.7 million barrels is really that big of a deal out there. Not doing much to impact the price of light sweet crude. If we take a look at it, the January contract out here right now trading out at $67.49 as we speak. No bullish reversal signals, candles, or anything along the way as we speak right now. If we take a look at, I might have to go to the continuous contract in order to, I think I do. Give me a moment here. Yeah, I'm going to have to do that. Let me switch over to the other tab here. I think I can pull up the continuous pretty easily. We can look at it on a quarterly basis if we want, monthly basis. Light sweet crude. Here we go. Okay, so let's go look at this on a longer term. It's up about 1% this morning, but that's really not that big of a deal. Let's get rid of the 30-minute chart out here. Let's go ahead and put a monthly chart and get a feel for where maybe light sweet crude might be headed to. So if we look at just simply retracements here, the retracement that we would be looking at coming from the lows out here, natural retracement from the low of January 2009 all the way to the high. The peak that we saw was in May of 2011. That was at the 114.83 mark. What we can see here right now is that light sweet crude has come down to the 0.618 retracement level. Now, at the 0.618 retracement level, if we were to see a bullish reversal signal on a daily chart, that could say, okay, this could be some type of, maybe it's a tradable bottom. Whether it's a bottom or not, I can't tell you, but it could be a tradable bottom. If we don't see any kind of bullish reversal signal out here, any other kind of a pattern that would be in play here, because even on the monthly chart, we've got an A to B equals CD. That pattern looks like this. If we come take a look at the A point on this is going to be on the monthly, we would use the high. I would use the high of August of 2013. My B point would be down here. Looks like the low of January 2014, and the high as the C point of June of 2014. That becomes our A to B equals CD. We are at the 1 to 2 A to B equals CD to the downside inside of the monthly. Now, inside of the monthly, a longer-term chart out here, I will tell you that price is on the strong side. You probably don't know what that means out here, but that says that from a monthly chart, that actually light sweet crude more likely wants to head to the next level. Now, in this case here, I can put in the 1 to 2.618. Let's go. Let me switch over to that tool. Let me A to B equals CD. Let me add a level out here. Let's take it to the next level. Fib level number 5, 2.618. Let me change this to a white bar as well. And so that would take us, so the 1 to 2.618, A to B equals CD, that gives you a price of $52.75 out there. So if we don't see any kind of reversal signal on a daily chart, then and we see price break below or close below 64.38, the 50.67 to 52.75 should become your next target. That would actually could set up on a monthly basis a Gartley buy pattern. So that's what you would want to be looking at. Again, if we go back to the daily chart out here, so we know we've got a monthly potential monthly A to B equals CD to the downside here. We've got the lines for our retracement levels, but no reversal signals here. Really, you couldn't necessarily get one today. You'd have to blend a couple of candles together in order for that to come to fruition. So that's what's going on inside of light sweet crude. Let's go back and take a look at that ES mini chart out here. And what we're going to see is during that last 30-minute chart, that 2070.75 continued to act as resistance. No reversal signal. We're now into the next 30-minute bar. This doesn't end until we get off the air. Well, just before we get off the air at 11, you can see price now at 2072. So it is cracking through here. Now it's a 30-minute chart. So on a 30-minute chart, we got to wait the full 30 minutes out here. If in fact we were to actually see this area get rejected and move below the open of that last session. That open of the last session, by the way, was 2069.75. You'd have an actual bearish reversal signal. You'd have a bearish engulfing candle. We don't have that here just yet. We got to wait for the next 22 minutes to actually play out in order to be able to give us any kind of information out here. So that's where we're at this stage. I'll give you the as we go into the close, we'll take a look at it, but there will still be, when I say the close of that candlestick session, there will still be about, I think, around 2 to 3 minutes to go before the end of the show. So anything can happen, as you know, in this market in 2 to 3 minutes. If we go take a look at, let's look at some things here. What have we not looked at today? We've looked at gold, which is up $9, up $11 as we speak. So we got gold jumping. Let's see, is it running into that trend line out here? Let's go see what gold is doing. Let's pull this back. Well, that's a weekly. Let's take a look at the daily chart out here. What do we got gold doing? No, it's not inside that trend line here just yet. So that's, let me pull this back. So there's really two trend lines. You know, if you're trading this, you want to be paying attention to those trend lines because it'll provide a ton of information to you. And I suggest drawing two. I've gone ahead and painted mine in both red and yellow. So yellow, we'll call that a caution sign out here. And right now, if you ask me where is that priced at, it's probably around $12.16 or so. You're at $12.10, so another $6. You break above that, then you've got the larger trend line. Now, that larger trend line is priced at about $12.32. So if you can get above $12.32, that would be pretty bullish. That'd be extremely bullish out there. And I would say that, okay, especially in light of the euro moving lower and the U.S. dollar index moving higher out there. So that's what I would be looking at. With regard to some of the gold equities, we looked at some earlier. Let's look at a couple that we did not look at. Let's look at the AEM as an example. Agnico Eagle, up $1.08. If we take a look, let's just, for each of these that we look at, let's look at what was Friday's session, what was yesterday's session, and where are we at today. Friday down with 2.4 million shares. Monday up with 4.5 million shares. That's what you like to see out here. Now, what's the next level that this needs to prove itself to us? Well, it's got to repair this open window, this gap down. Even though it moved up higher on Friday with heavier volume, yesterday was a pullback with 3 million shares. You don't really want to see a pullback with 3 million shares yesterday. Now, what we can say is that it was an inside bar, right? We talked about the inside bar inside of the QQQ ETF. Well, in the case of Agnico Eagle, it too had a inside bar. Now, because the prior day, meaning the December 1st, things were moving up. I'm looking at that as truly being the trend out there for that inside bar. So this would say to me that Agnico Eagle wants to at least go test 25.89. If it closes that window, that, in my opinion, would also be pretty bullish out there. And you'd want to be paying attention to volume. Well, volume today, 784,000 shares. Ideally, it would do volume of more than 2.4 million shares on the way up. That is doable. 7 to 6. Yeah, that's very doable. If volume were to maintain this pace. That's on Agnico Eagle. Let's go take a look at Freeport-McMoRan. FCX is the ticker symbol. Now, in the case of Freeport-McMoRan, you've also got to deal with the Aussie dollar out here. So, of course, in many of the mining equities, commodities, you're dealing with currency conversions, just as we are inside the large cap stocks out here, but perhaps more so inside of Freeport-McMoRan. What we know about Freeport-McMoRan is on Friday moved lower with 21 million shares, and then followed up on Monday with 21 million shares to the downside. So this would be a weaker than market equity out here, but this could be have more to do with the Aussie dollar. If we put the Aussie dollar up on my screen, why don't we maybe even do that out here? I don't want to do that on this chart. That would mess things up. We'll do that. I'll do that for you. I'll do that for you tomorrow. I'll set it up ahead of time, and then I don't have to waste any of your time and energy out there. What else do we have out here? So gold, we took a look at Gold Corp. I don't know that we took a look at Barrick Gold. So let's go take a look at Barrick. That'll round out. Take a look at some of the mining equities out here. And so we look at Barrick on Monday, down with 13 million shares, up with 29 million on. Down on Friday with 13.4, up on Monday with 29 million, and then back yesterday with 14 million shares out here. So real sideways range. What Barrick Gold needs to do to prove itself to us, it needs to now get above that November 26th low, at a minimum close above that, which is $12.82, about another 50 cent higher from where it's trading right now today. Now, good volume inside of Barrick, 3.8 million shares today. Remember when it moved up here with 29 million shares, 3.8 times 6 is about 24 million or so. But that would assume that volume would maintain this pace. And that is not a good assumption out there, but it's the only straight line math that I can do easily in my head. So that's what's going on with those equities. Let's come back, take a look at this Puma Biotech, PBYI, down $32, running right into a level of potential support out here. Now, this equity here had a huge sign of strength back on July 23rd when it moved up with 8 million shares. Really wide price spread. Now, it's moved down to a swing point that was established 2 days afterwards as the stock pulled back, and that's at the price point of $189.30. We've actually hit 189.51. So you haven't hit 189.30. Does that mean anything? Nah, not necessarily. You're sort of inside the gap that was created by that first candle session out here. But this should be a level of support. So far today, 629,000 shares. What we say is if you see it close below 189.30, move to 175.89 is a likely outcome. That is that's the leader in the clubhouse on the way down, Puma Biotech. If we look at Amazon, let's go see what Amazon is doing, off $10, off 3% here this morning. Amazon had completed a 1 to 2 A to B equals CD to the upside. That was coming off of that low out here from the trading session of October 24th. That is a very important low. In the case of Amazon, it fit right to that criteria that Tom teaches in The Art of Timing the Trade. It does a 1 to 2 A to B equals CD to the upside, and then you get a confirmation of a bear sash candle with some accelerating volume on Monday to the downside. 4.9 million shares. What does this say? It says that Amazon probably comes back and tests the trend line, maybe even the candle session from October 24th. You might be saying, what trend line are you referring to, Steve Rhodes? I will say that trend line takes us all the way back into the 2008 time frame. Let's put that trend line on the screen. Let's not worry about putting together a channel line. Let's just take a look at the trend line. So if we take a look at, let's use a red line out here, the red line in the sand. So we take a look at coming off of that 2008 low. You can see here, I mean, it's about as beautiful as it gets for a trend line, and a trend line in this case here acting as support Aruni. That support, the low that I'm looking at is November of 2008. Then my next touch point for the low is July 2010. Then my next touch points could be December of 2011 and February of 2012 out here. What we can see is as price moved lower back in October, boom, smack dab, right down into that trend line. Now, 111 million shares to the downside, and last month as it moved to the upside, light volume, 68 million shares. So what we could be seeing inside of Amazon, more so than the test of that high volume low out there that was created on the gap down, what I would be looking for is for this trend line to hold. We'll see if it does. If, in fact, the trend line fails, price gets underneath it. This is a monthly chart that we're looking at. We can do the same thing on a weekly chart out here. But if price gets underneath it, comes back and is rejected, can't get back inside, that would be telling you that there's been a change in trend that goes back to 2008 that is in place for Amazon. Then what you'd be looking for is you'd be saying to yourself, I'd be saying to myself, hey, what's going on at the, probably I would look at the May 2014 level as my B point of an A to B equals CD to the downside. So you see, I'm not coming all the way to this session here from October. And one of the reasons I'm not doing that is because of the retracement that was made back here on in July of 2014. So if, in fact, Amazon were ever to crack, now I can't say ever, but if it were to do it in the month of December, November, we're in December here, yeah, I can get that straight, that would be a close below 284.38, a close below the trend line out there. That would say you'd have an A to B equals CD to the downside that could form. Now, that A to B equals CD pattern would actually form a Gartley buy pattern. Now, this is a monthly chart, so much longer-term chart that we're looking at, but just to give you a feel for what those numbers would be if, in fact, that's the pattern that were to play out here. Remember, it's got to really break through a very strong trend. Then you're looking at 241.17. Now, 241.17 out here, you can see kind of almost, well, I don't know that you'd see really an interest spike. I mean, I guess you could, 284. But 241.17 would set up your potential setup on a longer-term basis, a Gartley buy pattern. Now, that's coming off of the lows back here in 2011, December of 2011. Your 0.618 retracement is a little bit higher than that one-to-one, 259.07, but you'd have to go with the 240-ish level that I gave you. Sorry about that. 241.17 would really be where Amazon would need to get to. So you've got the trends out there. The trend lines will pay attention to that. So the Dow's up 21 right now. S&P is up 5, continuing to flirt with that 2070-50 level. We come back, take a look at the summation indexes here. Inside the New York Stock Exchange up above 0. Inside the composite up above 0. If it stays above 0 all day today, says the action that we saw here over the last couple of days is that the bears just simply, the sellers are just overwhelmed by buyers out there. It's as simple as that. And any bearishness would just simply, in my opinion, would be erased out there. And the pullback that I'm looking for, which is a 20% pullback, much less than a 0.382% pullback, is gone out the window. Just start looking for the just the continuation of the Santa Claus rally. We'll see. We'll see how this all plays out. We've got to wait till the end of the day out here. If we look at, so that was on Amazon. Let's look at a couple other things here that are moving. Let's look at a couple things to the upside. Well, we'll just have to wait. Strategic reason to get you to come on back and listen to the last segment of the show. This is Steve Rhodes with TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we got the Dow. She's up 15 points. S&P is up 5. Composite up 3. Russell 2000. Let's go take a look at the Russell 2000. That's the lead dog in the clubhouse, up by $10 right now. Let's go see what it is doing. Let's take this. Oh, this is kind of interesting. Let me put this on the weekly chart for you, show you something that I don't think I've shared with you this far. And pretty amazing. Absolutely just totally amazing out here, because I've gone back to try to find this. Now, this is a weekly chart that we are taking a look at. This truly is 4 doji candles in a row out here. Now, a lot of times folks get doji candles mixed up with spinning tops or high wave candles out here. This truly is 4 doji candles in a row. So that means for the entire month of November, for the most part, that the Russell 2000 did basically squat. Did nothing. It had intra-session emotions, that's for sure. But it opened and closed right. If I put the monthly chart, now I don't know if it's. Let me see. Does monthly chart show doji candle? Yeah, it actually does. So on the monthly chart, you've got a doji candle up here at a potential resistance. It's the second one up here. Now, they're not used as reversal candles. You want to see what takes place the following month. But you can see really the consolidation pattern that the Russell 2000 has been in really ever since. You can take it back to November 2013. You could even take it back one more month. You could take it to October 2013, and then we would use as our session from the low in October as our consolidation area out here. So pretty interesting. If I go back and take a look at the weekly chart, I don't know how this is going to play out here this week, but it tells us that the market is tired. On a weekly basis here, you've got the gravestone doji that took place here last month. It's the second gravestone doji out there. You got to love how the Japanese candlestick charting has these very colorful names out there. And yeah, gravestone doji, it's not a bullish sign out there, but nonetheless, it needs additional follow through. We have not seen that as we speak just yet. Right now, it's Russell 2000. We're only into Wednesday. That is the leader in the clubhouse on the way up. What Russell was not able to do was to break out this little gap up from October the 31st. Came down and tested that level, but was not able to break that out. All right, 2 minutes to go. The 2-minute drill out here. So what are we going to focus on and pay attention? Look, I think the summation index, many of you don't have access to that. What we'll want to take a look at tomorrow or at today's close is where is the summation index? Have the sellers come back in? Have they maintained control and the price oscillator is down back below zero? In the New York Stock Exchange, inside the composite, and then, of course, inside the Dow as well. On the other hand, were the buyers able to take control? And they were able to reject that low, that move down in there. And if that's the case, okay, then now you've got the potential of the bullish case. What would really give us the bullish case out here, in my opinion, would be the ES Mini closing above 2,070.75. And we are trading at, right now, 2,070.75. This has been the third attempt to break above that level. That doesn't mean that it can't. That doesn't mean that it won't. What it does mean is we've got a little less than 2 minutes left in the trading session, and looks like maybe it's going to close right around this line here. Now, in the next 3 minutes, it actually could trade lower. We could get a bearish engulfing candle with one of Stevie's favorite patterns out here. Let me just update the chart out here. See if it extended to the third session. Well, I probably don't have this thing set. I probably have it set on at the close. So we've got one of my favorite reversal candles. We just don't have one of my favorite reversal signals yet, and that would be a candlestick. So, folks, it is Wonderful Wednesday. As always, thanks so much for joining us here. Stay tuned. We've got our man, Basil Chapman. He's up next. Go pull out those surfboards. Go wax them up, so that you can ride the wave with Basil. And we've got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. Have a great Wednesday, folks. Look forward to seeing you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.